Good morning, peoples. Bruce with Targeted Wealth Creation. Let me jump in. I'm long overdue on this, so I want to do a big update on metals and miners and just what I see over the short term, medium term, longer term, and why I see it, and just a lot of relevant data. This will probably be 40 to 45 minutes. Maybe I go faster. So if you don't have all that time to watch it now, you can tune in over the weekend. It's just, this is when I got it done. It's more fresh, so I wanted to get it out. So apologize. It's long. I can move quickly through it, but I need to explain a lot of it also. All right, so the case for gold is set. Anybody who's looked, gold's been right up there with the NASDAQ and high flyers over the last 8 months or so. It's broke out. I'm going to show you the triple top breakout, what that means, what it typically does in all markets over the last 100 years. So a lot of good stuff. So central bankers of the world have added gold to their coffers. This really comes down to a simple economic premise, and that is when you run fiscal deficits, you have to print that money. Well, when you're the leading first world country like America is, although it's losing that as the default currency, most everybody knows that in the world. Many, many empires have been, quote, the default currency. I can think of the Roman Empire, many others. Asia's had it. It's been in the East, it's been in the West, it's been in Europe. So let's just dig in and look, and in some ways, Bitcoin is becoming the digital gold, right? So you have an alternative. Some people say, well, that's why gold's not, that's why the miners aren't doing well because the money's going there. But in the scheme of overall money, both of these markets are still minuscule. I actually have come to some new conclusions. I love Michael Saylor. I love Bitcoin. I don't really do anything with all the other crypto. And there's some arguments to say, there's 1,000 cryptos, but there's only one BTC. There's also some following and some things I've seen about Michael Saylor being an asset for the CIA and the worry that China and Russia and everybody else is moving to physical gold. And the US saw this danger and they set up Bitcoin itself. Now, whether I believe it fully, I believe there's something to some of it. And you saw the reluctance, okay, for people to move in. And then slowly it's been getting approved, the ETFs. It's, they don't like to say it's monetary, but I still think of it as a store of wealth. And it's very interesting. Gold, by its very nature, that you have to do so much work and spend energy and labor, and you need oil for that, and all these other things to get it out of the ground. There's a cost for that. Well, on the electricity side, on the Bitcoin side, you have to mine it, right? So whether Satoshi ever really existed, and maybe this was the CIA, it still represents a technology and a limitation. So whether I buy into the complete conspiracy, but nothing, really gets out of kilter. I mean, look at the Kennedy assassination. There's so much data out there now, it's pretty obvious who killed Kennedy. I mean, the government was involved in it between the mob and the CIA. The government wanted him gone, and they got what they wanted. I mean, there's just so much evidence there now on that. But look at what we had to go through 30, 40, 50, 60 years. And I'm still bullish on Bitcoin, and I'm obviously bullish on gold. I really enable myself to retire in the 2000 to 2011 run in gold. I was out of there after 2008. I had made so much on my money on playing the gold stocks. and some gold physical as well. Okay, so what are the total global gold reserves held by central banks? So let's talk about how much gold there is and where is it. Okay, so today, all the reserves held by the central banks, which is 37,000 tons. Well, if you look at how much gold is there, well, there's like 201 tons, right? Global gold stocks, 201,000 tons. Well, first off, and I'm going to go back up to the top, all the gold ever produced is still around. You don't consume it, right? Silver gets broken down into little pieces. Every cell phone's got a little bit of silver. Every computer's got a little bit of silver. So those things get recycled and scrapped and thrown away and sitting around in people's houses. So you lose a percentage of that. With gold, you only lose it when it's at the bottom of the ocean, right? Or it's in somebody's grandfather's, garage buried underneath. So it's either underground or at the bottom of the sea. But generally speaking, most of it gets found, right? So I'll come back to this. So it's very likely that here's the other problem. You see the BRICS, you see the push for a lot more countries now saying we want to go to some kind of standard. We're not going to a full gold standard, but we don't want to base it on China's yuan or Saudi Arabia's currency or some other country's currency, but we want to tie it to a basket of assets and no let one nation be dominant. Right. And so that'll continue. And eventually that puts more and more pressure on the dollar, which is very likely why the US, in conjunction with the CIA, maybe in fact did invent and create Bitcoin. Who knows, right? It still is what it is, right? It's just an argument of whose creation, who really created it. And I'm not here to debate that. Okay. So its still value is crazy as one if you take all the central banks in the world, right? And there's been some infamous, the UK, I think the Netherlands. There's been a few countries that sold large percentages of their Fort Knoxes, if you will, at the very bottom of the gold market. When the market had pulled back and they panicked and sold. So you're seeing Russia, you're seeing China, you're seeing some other BRICS elements saying, hey, we want to move to physical gold. Not all, right? By any means, but it doesn't take that much when you look at it. So the value, Microsoft, right? I should take you down through and then come back to this. So where do I think I have it on the other page. I have the top 10 US stocks and their market caps. Here we go. So look at this market cap analysis, right? So we're sitting there saying there's 201 tons of gold and central banks own 37,000 tons, which is about 3.1 trillion. Well, what's Microsoft's market cap? 3.1, give or take any particular day, right? What's Nvidia's market cap along with Apple? 3.5 trillion. Well, all the private owned gold in the world, right? Costco's been selling 1 ounce bar. If you take all the gold in the world in the hands of individuals, okay, not states or central banks or governments, it's 3.5 trillion. We're only talking about what is it, 17 trillion market cap for all the gold, period. Yeah. So 10 companies just on the US stock exchange are worth more than all the gold that's ever been mined in the world. So why is gold, why isn't it just considered an ancient relic? Because every time you create a store of wealth or a money, nations come, they abuse it because they have governments and politicians. And what a politician. People are the same, even though we have different cultures and different things. People always end up being the same. at the end of the day. We behave a certain way. There's fear, there's greed, right? There's all these things that drive us, emotions, and people tend to, in panics, do the same things. That's why charts are very interesting, stock charts. They're the psychology of people, is really what they are. All right, let's go back and move through some of the pieces. So just trying to educate. Now, some of you guys are going to tune in and you're going, Bruce, I know all that. Just get to the good stuff. But I do like to educate, if you notice that, right? It helps because somebody's saying, "Oh, I've heard something about gold, but yeah," and you don't even have to own gold. You can own an ETF with it. You can own miners, right? So let's go through all that. So gold is up 78 times in value since Nixon closed the gold window in 1971. I know I got people on here going, "Who's Nixon?" Right? Um, what it was we had a fixed value for gold for years and years. Gold hasn't been as valuable as it is in the last couple of decades and had these, massive, because it was, I wouldn't say outlawed, but it was controlled. It was said to be at $35 an ounce. And we told the world, if you buy our dollars and you want to trade it back in for gold, it's, exchangeable. Well, Nixon realized in 71 that we couldn't continue that, right? We needed to print money. We didn't want Europe. We didn't want other people coming to us, giving our currency back and asking for gold. So he closed that window. And that was the beginning. That changed everything, right? So just from 1971 to 2024, gold is up 78 times, right? I'd call that a parabolic move. So here's the other little thing that I forgot to tell you. It's very likely that of the global central banks and many of the Western central banks, how many of us know how much Fort Knox even has, right? Does it have any gold? Does it have some of the gold? You can Google it and it's reported to say at one time, but there hasn't been an audit um, in 30 years, I think, of Fort Knox. Okay? So, hence, if you get Bitcoin and you move to a partial Bitcoin reserve and it gets them out of what maybe they've cannibalized all the gold. So, what do people do with that? Is just like you, if you go out and you buy GLD, it's an ETF that's supposed to store physical gold, and it kind of trades one for one with what gold trades at, right? Gold goes up 8%. In theory, GLD goes up, and there's SLV for silver. But the problem is who manages those? Well, JP Morgan is the custodian and has the right to store it. So if they want to come along and say they got all this gold and you're spending millions and billions in an ETF buying it, you're saying, "Gotcha, I got it here, right? Right here, right?" Well, do they? They're the custodian, they're the lender, right? So they can move it around, they can lend it out, charge people, and not even have it there. So it's scary to be the least. I've owned physical gold ever since 2007. I went into physical, right? I was buying the stocks like crazy and riding that up move. But when I saw what was happening, and then when 2008 came, I'll tell you, I slept at night. I was able then to retire. And if you remember 2008, I was calling Fidelity and arguing with them about, "Hey, I've got all this money in the money market in my 401k. I moved it out of stocks into the money market." And I said, "But I'm seeing that money market isn't on value of $1, right?" And there were a couple of money markets and some brokerage that were saying they were only going to pay 80 cents or 85 cents on the dollar. Man, I was calling and talking to people. I wanted assurance and, all that kind of stuff. And it's just the nature of panics. That was an awful time. I remember that Lehman Brothers and And you know, it was ugly. I got hit massively. My gold stocks went down about 90% during 2008, but I had literally made 8x on my stuff. So I was so far ahead of the game that I just had stops and got out. Um, and then got back in 2009 and participated more in the run up, but I was already retired then. All right. So here I want to point out how bubbles happen. We're probably not far from a bubble in the stock market. I've been saying that, but you know, the way things are going, we got to have another 6 months or 18 months that we still run. We may run to 6,700 on the S&P 500. Although I did, from some of my guru guys that I subscribe to, they're saying over the next 2 weeks there's a danger out there, a real danger. You know, part of it is around the theory that those that oppose the new administration, elected administration, don't want to see them come in on January 20th and execute their plan. And if you create a false flag war, you do something radical enough, maybe you can claim martial law, stick another president in maybe, and say we're not going to change administrations because we're at war now. I mean, again, far-fetched, but I mean, based on everything we saw from assassinations to all this other kind of stuff, I wouldn't put anything past anybody or anything at this time. These are still very volatile times. But I'm still now in favor of a melt up in the stock market, a melt up in gold and silver and mining stocks as well. We sort of need that. It's very difficult to have a 40% pullback in the S&P and stocks and have gold stocks go up. It just doesn't happen. You can have a flat stock market and have gold stocks super outperform as a sector. So let's look at this parabolic rise and just what it means. This is how crazy things happen. See, at $35 gold, right, going back, so all of a sudden, gold starts moving. It goes up in 71, 16%, 72, 48%, 73, 73%, 67. I mean, you don't even see this hardly. I think the NASDAQ this year is up around 40 something percent. So when you see these consecutive numbers, you're starting something extraordinary in the chart. So then what did you have? 29% correction, right? And that feels a lot worse than it is. Most people go, okay, well, that's over. Then what does it do? Continues parabolic move. And when you think of this, you started at $35, 24x is what happened in 9 years. And in 79, and when you started going, you're up 133%. And I got a chart later that shows this in more detail. And in 1980, you hit $843 in January alone. Now, at the end of the year, these are all end of year numbers, right? What did it change from 1970 end of year? This much, right? Year over year. So this still showed a 12.5%, but here it was back at 589, having already been 843. I think officially the intraday high, I think, was 850, somewhere like that in January of 1980. So it's not uncommon for these parabolic blow-offs to happen. I don't think we've seen anything. And here we are, you know, with this 24x, but we're nowhere near where I think we go. Okay, and I'll talk about that a little bit more. How about just the 21st century? You hear that a lot, 21st century. What is that? Well, that's all of the years in the 2000s, right? So we're going to go all the way to 2099 to 21. As we get to 2100, I won't be around. Probably a lot of you won't be around, but who knows, right? I guarantee you I won't be around. I remember I came around right at the end of the first half of last century. So I've seen a lot, right? When you see the 70 to 8 gold run up, I wasn't buying a lot then. I bought my first house in 79. But oh, do I remember my boss was, cashing in all of her silver candlesticks and all that. I mean, I remember well the 79, 80. I had some neighbors after I bought my house, and they were older, a couple was older, and they were saying, oh, gold's going to 2000 and, all of this stuff. I thought they were kind of eccentric. I didn't know a lot about gold. I really didn't at that time. I didn't get into gold until into my 30s. But at that time, I was amazed at it, but I didn't know what I know now about that era. But I participated in the 2000 to 2011 run up. Um, and I knew that intimately, so I studied the 70 to 80. So that's why it's so familiar to me. All right. So gold is gone. So between 2001 and 2011, and this is when I started buying gold and gold stock, 2001. And I was buying South African miners because they had moved up the most in early 2001. Harmony, Gold Fields. Uh, there was another DRD or something, which later crashed really hard. Um, they had so gold rose 8 times with no single down year. Remember, that's beginning to end. Because in 2008, gold was down quite a bit during the year. But what they're saying is no single down year, right? And the problem wasn't gold going down so much, it was the stock market with Lehman Brothers and all that. I mean, like I said, my gold stocks went from 70 to 90%. I got out before all that, but that's what they ultimately did. Um, and it was ugly. But gold only went, I think, from 1,000 high in 2008 to 700, I think. And then here it was in 2011, 19 something, right? So gold has gone from 2% of global assets in 2001 to 0.5. That's less than 1%, people. So gold has outperformed even high flying stocks in this century. Now, you can all go out and find an individual high flyer. You can get a Tesla or a Nvidia or somebody like that and say, "Oh, this stock went up." But when you take the S&P. So for the last 24 years, the S&P with dividend reinvested is up 572%. Well, gold in that same period is up 990%. Okay. Still, very few people own gold, and most have no idea that it's performed so well. It's the opposite of a FOMO market. You don't want to own it when everybody and their brother's on about gold. Nobody's saying anything about AI, crypto, Bitcoin, anything else, right? So it's not that issue at all. So it's got a lot higher to go. All right, so we've talked about this, gone through most of this. So what I didn't go into much, this is still a legitimate jewelry, right? So in the jewelry world, you're still dealing with people wear it, they have rings, all that. You never lose money on that. You hold it long enough, gold goes up, your jewelry goes up, right? I have a 14 karat college ring that I never wear it anymore, but it's 14 karat gold. It's worth some money. Um, Lots of things like that. So most of my gold today and silver, I've got gold eagles and some Canadian maple leafs, and also a couple of monster boxes of silver eagles, U.S. silver eagles. I do believe that silver will outperform gold massively, but that typically happens in the latter part. Go back and look at that 70 to 80 run up in gold, and silver just had a blow off top right in 80. So gold's probable direction based on the trend phase of the 54-year cycle. we're a little bit further here. We're closer to this line now, and we're 2680, close to 2700. And this is realistic to me. It's not so, I see 3000 easily next year in the mid threes for gold. So getting to like 7500 into 2027 or so doesn't seem unlikely at all. This is also, so on December 12th, we're still 0.140. So this chart is 5 months old. I save these various charts that I really like. And so I didn't make another one, but I did a 1 year chart and on this analogy, right, which is right here. Because on stock charts on the free version, you can only do 5 years, but you can't do like 10. And this one is like 20 years. So I just went in and did the 1 year and it's right at, 141. So we're still setting on that range. But one of the things you'll see whenever you see good stock chart people, they'll talk about a base. And whenever something bases 10, 15, 20, 25 years, and there's a solid base, when it does break out, it's huge. I'll show you a triple top breakout of gold and how far we've run and what the likelihood of how far to back up some of this other stuff. So the longer the base or the bigger the base, the bigger the move when it breaks out. All right, guys. So I'm faster on that than I thought. I'm going to jump into some stuff. um, James Flanagan is a guy I've followed and subscribed to over the years. I'm not currently subscribed to him, but I have access to some of his free stuff and some of his promotional stuff that he puts out to entice people to sign up when he thinks it's a good time or he sees a move in the market. So he had a move last February where he recommended going into gold and gold stocks. So some of this stuff is from that, and then some of it's from updated stuff, and then some of it's my commentary. There's nothing in it for me if you want to go out to James Flanagan. What he does is he does a lot around futures. But why I like him in particular, he's another one of the cycle guys that I like. I have 3 or 4 cycle guys. But he has an historic database that's over 100 years old that he keeps track of all of these markets, stock market, futures markets, soybean, oil, grains, coffee, sugar, all that type of stuff, stocks, and then gold, silver, and gold mining stocks. Well, one of the things when you want to go back and compare 50 years, 100 years, GDX wasn't around. So he will mention the HUI index, which goes back some 50 years or more. So a lot of times you go, well, why is he showing that? I like to look at GDX. Well, they're not that far-fetched from one another. But again, if you have interest, go pursue that because some of these charts are from him. Then I've annotated them additionally, or I've written things. So just know that not all of it is my original stuff. Okay, not trying to claim that. All right. But I do have the background and expertise to understand it and explain it to you, which helps a lot. So notice this is again that 79 chart. So I annotated with that saying, hey, look, this thing moved, right? This is just the 79 to 80 move, right? If you remember, the market started in 70, 71, moved up. When it got up into 74, which would have been over here, it corrected back into 76. But we're talking about 15, 20% pullback. Maybe it was even 50%. Maybe it got up to 300 and pulled back to 150. I don't have that right here, but all you got to do is go back and look at the other chart, and I think that'll show it. But when these things go parabolic, you're close to the end. But you're talking about improbable amounts. But then again, I pointed out, guys, remember one of my problems with Yieldmax, for those of you that know me from Yieldmax, was look at Tesla. They came out with Tesla. So Tesla had gone from $20 to $400. So essentially a 20x move. Well, this gold moved 24x. Well, you don't have a lot of energy after that to repeat the same thing. So you see here that it got back to below the halfway point. Well, Tesla went from 400 back to 100. I mean, it got cream. Where is it now? It's back up around 420 or something, right? So, I mean, Tesla will have many multitudes. It really represents technology and things at its best. And Elon Musk is in favor with the new administration in the news all the time. Um, and if it was just Tesla cars alone, I don't think you would see the piling in. The electric car market slowed down quite a bit. He'll innovate. He'll do all kinds of things with robo taxis and, you know, but it's the robots themselves for the consumer market. It's so many other things in the Boring Company that, there's just so much that an engineer and a brilliant thinker like Elon Musk can go out and do. So the point is, if you ask me what's the best software company in the world and will be, I'd tell you Palantir. Now it's starting to just pull back here, but I've been singing that song for over a year. You know, I loved it when it initially came out. Was very disappointed. Went from $40 down to $7. I own some around 10, but I didn't buy it initially. I just kept watching it and saying, this thing I know is going to go. Well, it's going now, and it's going to go a lot longer. I think it will surpass Microsoft in size. I mean, it's a 188 billion company. Microsoft is 3.1 trillion. Right? So you're talking about something that's 3,100 versus something that's 188. Their scope and size just isn't there yet. But watch that. Watch that change. Okay. So enough on, but I like to let you know on stuff that can just go crazy. So one of the things that Flanagan does that I haven't seen anybody else do is historically he compares these Excel, if you will, databases of all of these futures and commodities and stocks and their movement, right? So let's go and look at something. And then there are cycles. Anybody who does cycle work, I've done cycle work for years. Gann is known for his 60-year and 90-year cycles in particular, and saying that things rhyme. They don't repeat to the exact thing, but they rhyme. So if I had a certain kind of move in stocks for 12 years, 60 years ago, I can expect that influence. Yeah, maybe we start 3 months later. So if we map out and it started in June of, 1960, then maybe it didn't start till September of 2020, right? Which would be 6 years later. So they're not perfect. But what Flanagan does is he details the percentages of the moves, and he'll come out and say, well, this compares, this impulse move up, the first wave move, is equal to the 20 largest of 100 large moves ever in this commodity or instance or any instance. And then what is a retracement cycle going to look like? Well, the average one would be a 38% pullback, right? The very worst was a 70, the very least was a 10. And so he labels and explains a lot of that. Take some of the guesswork out. So bottom line is we want to look at this and say we are tracking the progress of one of the two greatest bull markets since 1879 in precious metal stocks. during the 60-year cycle. If it continues to hold, by 2026, we'll have reached, and this is only starting back in February of 2023. Or was it 2024? I think it's 2024 for the gold stocks, but I'll get into that in a minute. Okay. I want to go through the, you can also apply this to the stock market. So far, the gold stocks haven't done really what they normally do. Gold is up 49% so far. Typically, you have on the stocks 2.5 to 4 times the movement in the underlying miners versus the metal. We're talking gold's up almost 50%. The HUI, now some of you again, why the HUI? Because Flanagan uses it. Especially back during that 2000 gold run, I was a big HUI guy. But today, GDX is the more dominant index. But HUI is still out there, still find it. And if you look, they're not far. I'll show both, okay? So the S&P, let's take that. Let's go look at a GAN 60-year cycle and see how it's playing out in the stock market as well. So if you did that and you went and looked at Flanagan's work or just took some charts and looked at it, you'd see that it correlates to a 1949 low around June 13th. So at that time, you'd have to use the S&P weekly cash value, right? So that was worth 1356. So what's that going to project out? Well, you would have to look at that whole run up and figure out. I mean, I can tell you right away from 13 to over 100, that was a nice move. That looks like a 6 or 7x move. Okay. And when does that actually correlate? Well, that correlates. Look at that. If I take 68 and I add 60 years, and remember, what does that tell me? That tells me 2028. So this is 2024, right? This is here. So maybe there's a pullback, more up move left. That's why I say there's more time. So here's an S&P 500 cash 60-year cycle projected out showing what GAN would have shown from the last 60-year cycle and how we were similar. Okay, we didn't have quite this pullback. We had a pullback, and then this one here pulled back. Okay, kind of went a little higher, pulled back deeper. Look at this, had a subtle and only projecting to here, and look at this, up. Pretty good correction. And look at this. We're blowing. It's like a blow off top. Okay. So this is saying if you followed GAN perfectly, and they never, are perfect matches, they're rhymes, they're in the ballpark. Okay. This says we would have topped in February 20th or 29th, 1966. Okay. So add 60 years to that. So that says February of 26. So that gives you an idea. Does that mean we're going to be done then? No. But we could do something like this and move and come over here and maybe later in that pull back to here. Now I've got another chart with showing some probabilities and so forth. So this stuff works, guys, but there's a lot of data to get to it, right? So now, just trying to show you, it's not just on metal. So here's precious metals, both a 90 and a 60-year cycle. The 60 is probably more followed. So this is saying you're going to overlay it with today's stuff, saying, okay, given this 2020, and what are the likelihood that things will shake out? Well, here we are right now. So the metal stocks, going back to this 2020, the average metal stock is still below that. But this is what you would call a massive bull flag, if anybody understands bull flag patterns, right? and this is like your pole, and then this is your waving flag out to the right. Now, it has started to move up, but you want to see a significant break above this level. We haven't seen it. What have we done in the metal itself? We had a massive move. I'm going to show you that in a minute. The stocks haven't done that, okay? Maybe it's because of all the AI FOMO and the Bitcoin FOMO. I'm not sure, but we haven't seen what we would normally expect. There is movement up, but we haven't seen the amount of movement, okay? Here's the HUI Gold Stock Index moving average. So when Flanagan put this out, he said initially it was about a 50% probability the correction is over, and a 50% that we go down and complete this. So he marks these various things, and he says of the 38 bull markets in the metal stocks, this ranks number so and so. So therefore, the second correction should be in this range 50 or greater percent of the time, right? So part of the problem is you have time. So by the time you get over here, you're out of time. So if we don't have this pullback, we could, and everything is normal. Again, this is on HUI. You can go look at an HUI chart and says, okay, we could go down to 256, but we could also just go right on up. There's nothing that says you have to correct. All right, here's gold cash. This is important, guys. So what happens to triple tops? Well, they're like knocking on the door. You ever tried to get in a room and you found out the door is locked? Well, maybe I'm just going to break the door down. Well, do you just, take your foot back up and kick in the door? I had a police officer friend who was in his mid 50s. He was a big, strong guy and was a lieutenant, and he shouldn't even been out doing that. He should have had one of the young officers doing it. I'm going to kick this door down. I was doing a ride along with him, right? All the other officers are paired up, but I could ride along with my lieutenant buddy when I was in like 18. And he was showing me stuff. And he came back and he kicked that door and he went flying down. He had to see the chiropractor. He was out of work for about 2 or 3 weeks. He was just kind of trying to show off. He was a great, great guy. May he rest in soul. What a great guy he was. That guy could build, could do anything. He used to help me with my car. Just such a knowledgeable and hands-on guy. Really, really a great guy. Anyway, enough on that. So out of these 3 months here, or these 3 tops, I'm going to show you a chart next that shows you what happened. But sometimes they act as a trap. It's kind of a bull trap, right? This is leading into early 2023, about the time that the gold mining stocks took off. So stats for all markets over the last 100 years. When you have triple tops, the breakouts, so 47 instances, okay, or 45 different markets over the last 100 years who have had triple top breakouts. Greater than 100% happens 49% of the time, the subsequent move up before it's done with its move up. Doesn't mean, I'm not talking about just moving up, retracing, and moving up again. That still counts. So it says you have a 50% chance that you're going to go greater than 100%. 67% advance at least 51. The average advance is 152%. Okay. So here's your current gold market. So what happened? Here's your 3 triple tops. Came up for a 4th, right? And just kept on going. So where are we currently? Are we at the top? Are we in danger of being done? No, hell no. We've pulled back some. And again, where are we on this pullback? Could we have a little bit in here? Yeah. But this market has demonstrated so much strength in gold. Normally, I'd say we might have pulled back to 2,200. Sometimes you go back, as Gareth Soloway loves to say, and I love to follow him as well, anybody who knows him. he talks about returning to the scene of the crime. But basically, it's the same thing as retesting the breakout. I just liked, I think it's cute. Return to the scene of the crime. Many times you don't, many times you do, right? This would have been the prime opportunity that you would have thought you would have come back to it. This seems aggressive. Based on the market, I doubt we see anything below 2,500. All right. So I'm going to wind this up, guys. What am I showing here? I guess that was just redoing. So the thing that we want to see, these are the current legs up. Okay. Now this is getting into metal miners, some of the better metal miners, the GDX index average, gold itself, silver itself, and the NASDAQ. Okay. So where are we currently? This is as of like 2 days ago, 2 to 3 days ago. So when we look, GDX hit a high of 72% up and is up 48. Gold went 41 and it's up 36. Again, you never normally see this. You see 2 to 4 times the movement in the miners. So that says the moves up in the miners hasn't even happened. Silver, 46 out of 59 for a high, and you see the amount of time. Look at the NASDAQ. So the NASDAQ over the last 1 year and 1 month is up 53%. That's phenomenal for the NASDAQ, very close to its high for the year. So you don't, that's why I say to people, if you think you're going to get a repeat of this, and you guys that are in income funds and you're doing it on indexes, the S&P and all that, there's no way that you're going to see these things repeat year after year. You may have another 6 months of it, 9 months of it, right? But you got to expect pullbacks, and you got to expect big pullbacks at times. Okay, so here's your current legs up. Love all of these stocks here. They're the better. They're typically the leaders. And this is kind of key. This is one that I want to make a point at. So take Kenros, good stock. So anybody who's anybody in gold or gold stocks has been playing it, investing in it, understanding it. You all know that the last peak was 2020. And what did we do? We just pull back into 2022. Now, this stock has at least gotten up and surpassed at one point. There are a few that have. But the average one is probably at the 80% mark of where it was over here. So until they break out, and the leaders break out first and the rest come along, and then gold breaks out of its high, it's not far from it, then you're all going to move up together. So we want to see this and want to be aware of this. Okay. Summary. Gold's been the leader, gold stock's following, but way underperforming what they traditionally do. So, Bruce, you haven't shown me other charts. You haven't told me GDX. What about Nuggets, 2-time GDX? There's a GDXU is 3X, the miners. Oh, what about silver? I own a bunch of AGQ right now. I've been accumulating over the last 3 months. I don't mess around with this one. If I want to own more, I buy the 2X. Because I think silver is so massively undervalued. It may not even have as big a move as gold in the next year, but it will massively outperform gold. Always does, right? But it's a scary metal in that it's just volatile, right? So GDXG is a medium size. What about if you want to play a negative? Go get dust, right? And there are other ETFs and companies. So there's just too many for me to list and tell you, right? But hit me up with questions on this presentation. Hopefully this helped you guys. I know I can be long in the tooth on it, but if I don't explain some of this stuff to you, you don't fully understand it. Those of you do are just going to move through quicker. All right, again, Bruce with Targeted Wealth Creation. You probably heard the market bell for the market starting up on my Thinkorswim. That's what that noise was. All right, guys, I will talk to you again. Again, this is not financial advice. This is for entertainment only. Bye for now. Have a great day ahead.